Good morning, good morning, good morning. I just woke up half hour ago. Don't ask me why I'm doing a video on the morning of PCE on the biggest inflection of the year. Don't ask me why. Okay, I believe we're about to have a reverse COVID rally. It's going to happen, people. It's going to happen. A reverse COVID rally, but we are in the middle of two gigantic moves. Okay? We called literally the top, literally to the day. Okay, we literally said we're gonna get a blow off top the next day, and that should be the top. We got it. We thought that we were gonna either drop 6% in a day, or we would chop 5 to 10% over the next couple of weeks, and that's what we got. Right? It was very difficult to tell because there was no pre-move. It was just a hugely blow off top, and we just couldn't tell either or. It's a very unclean wave. So we got the drop. Now it looks like we're retesting this long-term trend here on the Qs. We bounced off. We went below it. We exploded on that December print. This was where algos got triggered on the memes. I believe the memes activated in terms of sector rotation very quietly. Things usually happen around Christmas and Thanksgiving and the holidays. It like embeds the psychology for whatever reason. It just always does. And I think this was the sector rotation for the memes. So like everybody during Christmas was like, oh my God, the memes are crap. Get out of the memes. They're garbage, blah, blah, blah. And then everyone sold. And then this is where they all exploded. And then you can start seeing how the ARK stocks and the meme stocks started blowing up in January. Our complex had the best month ever in January, right? Something happened. Tom Lee said something where something happened on January 10th to the 17th or so that hasn't happened in 70 years. And or for the last 70 years, it happened 9 times, something like that. And every single time the market was up 100%. It was like a breath indicator, three of them. And it makes sense because we called a massive January rally and a massive 2023 rally. So if they got this massive breath indicator, it's triggering something, right? And you're below support. So it's triggering something, but this is very, very unhealthy. Now, we are at a huge inflection. What I want to see, honestly, I want to see a gap down and the COVID rally starts today. That's what I want to see through and through. I'll explain all the things that we see as quickly as we can. We have PC in 6 minutes. I see reverse COVID rally starting no later than next week, but possibly today. Today was the day that COVID started in 2020. And this is literally a reverse COVID rally that the technicals are setting up. How freakish is that, right? And this is one of the reasons why we were looking for whichever way we trigger early January, which is the way we're going to go. And we expect up because of exactly what happened in 2021. So like there's all these weird reverse COVID, reverse fractals of the market on a yearly basis. Anyway, you can see how this stabilized ups here. We got the CPI, it changed everything. The 7% rally that people already forgot about. This stabilized up, and then you got a corrective wave, and then you can see it's right here. And you can see how we're crashing into this on everything. We're crashing into this on everything, right? So it's possible that this is a bottom. The DMI reverse. Sometimes you don't need to go to the zero line for the wave cycle to play out, but you need the DMIs to go. So this is a wave cycle, possible wave cycle. Or it goes down to the zero line. The problem with this is that I cannot tell because this was super unhealthy, right? We explained. But it's possible that this is a full wave cycle. We broke it below 50. We bounced off the 50 SMA right here, which looks really clean. This looks like it really truly bounced off of it. But I think we want to retest the downtrend, which is like right here, and the 200 day. It coincides perfectly for this to gap down and then go straight up. The problems with what I see is on the Qs. Well, it's not a problem. Is that we got a glitch trade on the Qs up here. It went up 2%, which we like to glitch trade. But when you have a glitch trade like this, and then it rolls over, it usually means that a drop of that relative magnitude, this would produce like a 5 to 10% drop. And we went down instantly. We're down 3% or so. But we're in support. And just the way the wave is set up, it looks like we're going to explode higher. And then we also got a glitch trade this morning, which usually triggers it to the upside, right? And then we have... and look where it gets triggered on the hourly, right on the hourly zero line. So it activates here, it comes down, triggers. So it's showing like it wants to go up. So I think any downside would be a buying opportunity. But there's so many conflicting things. The memes look insane. Specifically, like AMC, is that this stabilized to the upside, this violent spike, and you have spike, 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 and then violent activation, and then you have this huge drop off into these weird coils, like red, neutral, green. It had a super violent spike, super violent spike, super violent spike. And this is preparing for the move. What is it preparing for? And then we just had these relentless up move. It's preparing for earnings. And what is it preparing for? It's preparing for the break of the downtrend. The algorithmic, this one broke fake and it went right back below it, spiked up. And then the algo change on the memes and the ARC complex was right there. The AMC bottom looks beautiful. I believe we broke that MACD right here on high volume. We also broke the weekly middle Bollinger at 5.87. We went through it, got rejected, and then went through it again, and now it's retesting it. So it would be great if there's like gaps down and then goes straight up type of thing. And it's setting up for a next week break. So next week, high probability, or the week after. I can't tell right now. This morning, there's just a lot of weird things. The SQ activated for the first time since January 18th. Right here, it activated and it went down, and then it activated. It went off at the close of this day right here, and then we gapped down, open red, and now we're right at 39, right? So this looks like it's going to go higher, which is the market's going to go lower. So there's all these headwinds of what's going to happen. And then we had the most important thing that we can do is the VIX newsfeed. Algo got triggered for the first time since August 29th. And what would you know? As soon as it gets triggered, look at that. February 17th breaks out as soon as it gets triggered. Okay? For the worst day of 2023 since like October or some shit like that. One of the worst days. Oh no, just one of the worst days since in 2023. The VIX got triggered like through and through. Like we called it, we saw the breakout, blah, blah, blah. The VIX also looks like it wants to go higher. The news feed says that the VIX is going to go 30 to 40 by mid-April expiration. And that is a guarantee. A guarantee. I know it sounds weird. It is 100% probability that the VIX will go to 30 to 40 by mid-April. But I don't think this is the setup to do it. I don't think the VIX just like goes to an uptrend. I think we're going to have a massive rally first and then drop. But it depends what we do today and how we behave today specifically and next week that will determine if this is going to be a blow-off move above the zero line and fails, and then the market rallies, and then we get the violent correction on like a big blow-off top, or if the VIX just breaks out through and through here. The 10-year, this was my alarm that didn't get hit back in the last video right here, and now it did get hit, and we broke above right here the yearly open print on a yearly basis. We exploded up into it, right? On a really, really corrective wave type of move, not a real kind of move. The dollar also got triggered on a news feed. Said that the dollar will get strong early in the year, and this is what happened. It happened like I think right here on the 31st, yep, and now it's going up, and now it just got triggered literally at 8:17 a.m. that the dollar is getting stronger. But that, if this happened here, it's possible that this could be a top for it. So we shall see what's going on right here. Here we go, PCE. This will help give us a lot of information here. Also, the ADX. So we have all these crosswinds here. Woof. We have a lot of Fed talk today, right? So there could be like we sell off, we hit the 200-day, we hit the downtrend retest on a violent drop, and then like whatever the Fed people say today, it like reverses the move type of thing. That's one of the possibilities.
Rick Santelli here, live on the floor of the I wish I was on the floor. CME HQ with some of the last breaking news of a very wild week. Our January read on personal income and spending. We're expecting a number up 1%, a bit of a disappointment. Up 0.6, up 0.6. Now, that isn't bad considering sequentially it was up 0.2 until we get a revision. That's the strongest level since October when it was up 0.8. If we look at the spending side, better than expected, up 1.8, up 1.8. That is the best level going all the way back to, and this is pretty healthy, going back to March of 21 when it was up 5.2%. Now, if we look at real personal spending adjusted for pricing pressures, it's up 1.1%, exactly as expected. Now, the money numbers. On the personal consumption deflator month over month, and realized the high water mark was 1% going back to 1980. That was in June of 22. It is up 0.6%. 0.6% of 1%. In the rear view mirror, it's up 0.2, up 0.6 actually is the highest level. Now going back to that high water mark, which was up 1.0. And if we look at year over year personal consumption expenditure, the deflator, it's up 5.4.
Let's support 292.75.
7%. That went back to 81. That was in June of 22. So 5.4%. How does that comp? Well, in the rear view mirror, we had 5%. That now becomes 5.3. So 5.4 is the highest since November when it was 5.5.
Okay.
On the month over month.
I wanted to see a drop down to here. Like, it looked so nice for the Qs to drop down to the weekly middle Bollinger and get a nice drop here. Also, there's so many things. The UVXY actually broke out. The way the UVXY breaks out, 100%. This is literally, it happens literally 1 to 2 times an entire year. The way it broke out super violently right here is what happens at the start of corrections. Like big, violent, relatively big corrections, and it happened right here. So if we ever get above this, if you ever get above this and you don't instantly fail, this thing is getting punted to the upside. You're going to get a reverse COVID rally. Like, that's what's going to happen. You best believe it. Like, it's coming. Like, literally called on, like, I literally every move. Like, it's coming. I know what I see. I know what I see. Literally the only person calling for a massive rally, literally at the bottom of January 6th, calling for a massive January rally. And then calling the top here the day before the top, saying, look for the blow up top. We're going to get a reverse COVID rally. The memes are going to break out. And then we're going to get a VIX spike between 30 and 40. I think it's going to break 40. I think it's going to break last year's high, which is usually an algo trigger, which would be at least that print right there, which was the top of this, which is 38, which makes sense because everyone always says you need a VIX spike above 40 to end all bear markets, blah, blah, blah. You don't need it because we're in such a unique environment, but it would be beautiful if it did, to give credibility for like the market bottom and whatever. So the guarantee is 30 to 40 by mid-April, okay? So if we have any type of blow-off move in the market, okay, we're at a huge inflection right now. If we have any type of blow-off move in the market, you're looking for a very violent drop. And then with that very violent drop, the market's going to come back twice as fast, which is insane. It's going to be insane. Something like this, huge blow-off move and then straight back down. It's going to be insane. There's just so many things. But the VIX definitely got activated. It definitely broke out. But the things with this is that either it activates and just goes. So we're still on the danger ground and we still need to recover. There's the glitch trades. There's patterns and the 200-day and the 388 glitch trade on the S&P that we still haven't hit yet, that this was one of our targets, right? The glitch trade's down here right before this option candle. And we explained how this option candle, this would be like 5, 4, 3, 2, 1. And then so like now it needs to go. See the cup, I know it looks weird, but the way the pattern is moving is that's exactly what it's doing. It's trying to go higher, but the downtrend is running into the downtrend. And so now we're at like the nexus of the universe. It can't go down anymore. Also, it has the same setup as this, where it gaps down, comes up and gets hard rejected. It's the complete opposite pattern of this, where it gaps down, and it was possible that we catch I made a video back here. I literally talked about how it catches and we explode up. And so I don't know which way it would break, and whichever way it breaks, it's going to go like consistently in that direction. Broke down. So then we knew. Here, it looks like it's going to do the complete opposite of this, like the opposite of this type of move, literally. We could get something like that, opposite. And so you're looking for a catch. And so the way that behaved, literally here, it gapped down on it. It had a weird coil and explodes up, fills the gap, and boom, gets destroyed on Fed Talk, right? It's funny, on Fed Talk, when Jay Powell spoke at 10 a.m. And we have the exact same setup, that this is the open, it gaps down. It's right on the day of COVID. We're calling for a reverse COVID rally like months in advance and saying it's coming, and it's probably coming at the exact time COVID happened. Like literally, you can't make this up. You can't make this up. So VIX gets triggered, but then gets stuffed. And so it's like the bigger trend catches it and takes off with it. And then the VIX breaks out. Like that's the other type of pattern that can happen. We also recall the way this broke down is it had a really weird day, just grinded higher this day and then gaps down, retests, and then fails. It's the exact thing that happened here. Super bullish setup on this day. It looks how ugly that candle looks. And it was super violently bullish at the bottom of this day and then gaps up and then does that. It was the complete perfect opposite. And then we had a huge rally, right? So then this breaks down and then we have a huge crash, right? Question mark, right? Question mark. So we're in a weird setup, but I just can't see it lasting past next week. So either we gap down, we're down 1.2% right now. Either we gap down and we hit this 200 and we literally close green, literally. So up 2.2% off the bottom. Or we chop into the 388 glitch trade with the possibility of the market just staying bearish because of the VIX algo trigger. I don't think that's going to happen. I don't think it's going to happen, but you have today to figure out, you know what to look for. You know, if the market catches and starts to rip higher, we're going to absolutely explode. We're going to absolutely explode. If we don't activate and we just look heavy and stay heavy, then the VIX is headed for 30 to 40. It's the possibility of going down to the glitch trade at 364, but this is not a high VIX spike environment. This is not the setup. If the VIX was going to spike 30 to 40, it would have happened here. Period. If it was going to do it, it would have happened here. And so it did this. It took too long, consolidated too much, and now we're basing at previous support, where this isn't the place to do it. You need to have a huge rally and have a blow off top to get that big VIX. 40 VIX is high. 40 VIX does not happen often. It's definitely a rare occurrence and it's very difficult to happen. This is not the setup for it. It's just not, even with the VIX activation. So you still, if you want, just be hedged relatively into mid-April, which I wouldn't even put a down strike. I would just literally do like at the money or buy whatever you need to buy to hedge for a 40 VIX spike by mid-April and then stay long. And if you want to be very specific, then literally just see how it moves like right here. This is what we wanted to see. Literally what we wanted to see. A gap down into the 200, 393.15. We're at 395.40. We got 50 minutes left. It's literally perfect. I'm sorry. It's literally perfect. You get the gap down. This is the retest. Where are you? I have a lot of these. There we go. This is the downtrend. Also, this is the downtrend too. This is the downtrend, 392.8, and we're at 395.41 right here. So if we reverse and we get back above this today or by next week, you're looking for a reverse COVID rally, period. Huge, like 430 to 450 by mid-March, the Fed meeting, which sounds crazy and sounds stupid. We have the 10-year. It broke out and now it's going up. This broke the uptrend. failed and it was behaving very weirdly, this should have crashed. And so the fact that it didn't crash, it's doing something, bounced off its 200 day for the first time ever. Wow. So now it reactivated. I didn't ever saw that. I didn't realize that. And retested the trend. So if this fails right here for whatever reason on all the Fed talk today, that's a top. We have the dollar breaking out exactly on a news feed, but the news feed here, the algo trigger, happened right here. And then we started the uptrend, and now it literally happened at 8:17 a.m. So you just have to see how it trades in the morning, and you look at the violency of the moves, the tape, and the volume of what's happening, right? And so you'd be able to figure out the direction. UVXY still can't get up. And UVXY broke out. It really moved really weird. We talked about this. It moved extremely weird. It broke this uptrend here, broke this uptrend right here. And when you break an uptrend, but you behave weirdly, it's usually not a break. It's usually a fake break because of momentum and overextending. And that happens. So you get like this inverse head and shoulders, and it just went whoosh. And that usually is the start of corrections. And then we got a newsfeed at the exact moment that UVXY breaks its downtrend. Like we got the newsfeed right here. As soon as we broke it, the VIX newsfeed came out. Like you can't make this up, right? So as of right now, this breaks out. You get the newsfeed, retests it violently, fills the gap, and goes. So yeah. And I have targets on UVXY at 6.98. That's one target, which is the yearly open area. There was a little glitch trade right around here that went to 6.98 post market that never got filled. The SQs did activate. They did activate the other day. Where are we? 39.8, right up here now. So they activated here. It goes up and then gets crushed. It activated here, it goes down, and then it rips, right? That's exactly what it looks like it's doing. Are we still good? We're still good on it. So this 9 looks like it's about to cross on any activation here. So just be vigilant. Be vigilant. You need to be prepared for what's coming, because if this doesn't change, if the newsfeed does not change, the Qs are bearish. And then you have NVIDIA that just had a massive gap up, 233, a massive gap up that could be a blow up top. This was my alarm right here. So we shall see on that. But everything looks really nice. Like Apple, look how nice that looks. You get the blow up top, you get this huge bottom coil. It breaks out on missing earnings, right? And that's usually happens towards the bottom. Breaks out, retest to 200. Where is it at? 147. It's not even down. Look at that. It's right at the 200 day. Literally right on the 200 day. I would have wanted a bigger gap down and then straight up. So yeah, so you know what to look for pretty much. One of the targets for right now, I'd have to make another video anyway. So we explained how this is not healthy at all. And now it's finally coming to fruition, the volatility of what this should do. Could this be it? It could be. It could be it. The volatility that you would want to see on the backside of this this rally coming out of this. So that's the inflection. If this is not the bottom and we don't rip, we're looking for this to go to the 0 line. You're looking for this to go to the 0 line. Okay? GG's, guys. Good luck out there. And I'm getting ready for a big rally and making sure you stay hedged until this resolves itself. And it's going to be amazing this year. This year is going to be extremely fun. All right, GG's. Peace out.